Can you believe it? The latest report from Redfin reveals that about 1 in every 15 homes in the U.S. have actually decreased in price over the last 4 weeks. This might not sound like a big deal, but Redfin thinks it's worth noting that this is actually a higher rate compared to previous years during the same time period. So if you're on the lookout for a new home, now might be a good time to start browsing and see if you can snag a sweet deal. Have you heard the news on the current state of the U.S. housing market? Well, let me tell you, things are heating up, or should I say cooling down pretty fast. According to the latest fall outlook report from the listing site Zillow, even in the slower months of the year, the competition is cooling off remarkably fast. This means fewer buyers taking the plunge and more sellers having to cut their asking prices to lure in potential buyers. A recent report from brokerage Redfin revealed that around 6.5% of the homes for sale in the U.S. witnessed a price drop compared to the previous month's figure of 5.8%. With the average 30-year fixed mortgage rate hitting a 2-decade high, data suggests that buyers are disappearing. Despite the decline in competition, though, it appears that housing costs in general are still as high as ever. So if you're thinking of entering the housing market, you might want to think twice and hold off until the market cools down further. The current state of affairs shows quite a bit of contrast from the typical picture of a seller's market. We're seeing some major price cuts happening for homes on the market. This is because sellers are feeling the pressure to reduce their prices as they face tough competition from new listings. Home buyer demand has taken a huge hit too, with sales dropping to their lowest levels in over 2 decades. And let's be real, even with these price cuts, houses are still pretty darn expensive. This is all pretty concerning for sellers, but it could mean that now is the perfect time for buyers to jump on the opportunity to snag a deal on a new house. So if you've got some cash to spare and are in the market for a new place to call your own, now might just be the time to strike while the iron is hot. And before I reveal the effects of these price cuts, please take 2 seconds to help me out and hit the like and subscribe if you're enjoying the video so far. Each like and subscribe is fuel for the algorithm that helps support this channel. Thank you. Now, back to what I was saying. The 30-year fixed mortgage rate is now at around 7.9%. That might not sound like a huge jump, but it's enough to make the average homebuyer think twice. The thing is, even though prices might be getting cut on homes, it doesn't necessarily mean that buyers are getting a great deal. When people do the math, they realize that they'll still be shelling out a ton of money every month in mortgage interest and taxes. We're talking $3,000 to $4,000, even $5,000 a month. For most Americans, that's just not doable. So, what does this mean for the housing market? Well, it's definitely causing some hesitation among buyers. People are starting to consider if it's really worth it to take out a mortgage with such high rates. And who can blame them? It's a big commitment, especially when you factor in all the other costs of owning a home. According to the latest update from Zillow, a whopping 9.2% of property listings are now on sale. Sounds too good to be true, right? Yes, I thought so too. Turns out, despite the discounted rates, the average price of a house has actually gone up by 3% year over year and is currently sitting at $372,500. More and more Americans are starting to feel the squeeze and are running out of money. The savings buffer we had in place to protect us have been slowly evaporating due to inflation, and unfortunately, it seems that only the top 20% of Americans still have any excess savings left. To paint a clearer picture, let's take a closer look at the numbers. Bloomberg recently reported that those in the 0 to 40 percentile income bracket have seen their excess savings dwindle the most, while the 40th to 80th percentile is about 2% below on inflation-adjusted savings. This means that most of us are now poorer when it comes to our liquid savings compared to before the pandemic. This presents a significant challenge for several reasons, with one notable issue being that we will increasingly feel the pressure to save as much money as possible every month. As our surplus savings dwindle, we will have to depend on setting aside a percentage of our paychecks each month just to maintain our financial stability. What all this means is that most of us are now poorer in the terms of our liquid savings compared to where we were before the pandemic. And that's a huge problem. With our excess savings gone, we now have to focus on how much money we can save monthly, if any at all. So, if you're feeling the squeeze like so many other Americans, know that you're not alone. Can you believe it? Redfin just released a report revealing that the average monthly mortgage payment has hit an absolute record of $2,666. That's a whopping 8.5% increase compared to last year. So basically, if you're looking to purchase a home right now, you might want to brace yourself for some steep payments. These new figures suggest that the housing market is continuing to climb, and it's becoming even more expensive to own a home. And did you know that the average household income needed to purchase a house in America has skyrocketed to $111,000 annually? This is because the typical monthly house payment of $2,800 has been annualized to $33,000. And to keep it below 30%, the household income must be $111,000. However, the sad reality is that most Americans have an average household income of only $77,000, much lower than the amount needed to buy a house. This means that the income required to purchase a house is much higher than most people earn, leaving them feeling undervalued and without a home to call their own. It's a tough pill to swallow, but the truth is that owning a home has become increasingly difficult for the average American. While the American dream may still be alive, it's now more critical than ever to be financially savvy and plan if you want to achieve that dream. The truth is, we're seeing a significant decrease in buyer demand, which means prices will likely drop even more in the coming months. But that's not the only factor at play here. Another aspect that's shifting in the market is distressed selling. This means that more and more homeowners and investors are feeling the pressure to sell their properties in order to get quick liquidity. They need cash and they need it fast. It's not just individual homeowners either. Investors are feeling the crunch too. With the current economic climate, many are struggling to keep their portfolios afloat, and they're turning to distressed selling as a solution. So a lot of sellers out there right now are dropping their prices. And why? Zillow has a few answers for us. It could be that buyers are pulling back and not as active in the market, or it could be because sellers initially set their asking price too high. Oops. Another possibility is that sellers are worried they missed their opportunity to sell during the peak summer season. They feel they need to get their property moving before demand drops even more. Either way, it's not the greatest news for buyers or sellers. According to Zillow, the housing market is pretty unfavorable right now in general, especially if you're trying to sell. In fact, it's even harder for sellers now compared to the summer, when there were fewer listings and lots of competition among buyers. So what does this all mean for you? If you're a buyer, it could be a good time to snag a deal on a property on the market for a while. And if you're a seller, you might want to consider a price cut to get things moving. All of these factors combined mean that there are some great opportunities out there for savvy buyers and investors. The Bureau of Economic Analysis recently came out with a report stating that the personal savings rate has gone down the toilet, dropping to 3.4% in September 2023. To put it in simpler terms, the average Joe only saved a measly 3.4% of their income. That's a new low. To give you a little background, this level of savings hasn't been seen since the peak of the last bubble in 2006-2007. Remember that awful crash we had? Yeah, we're looking at these same numbers again, which is not a good sign, to say the least. The low savings rates mean the housing market will suffer more distress, more foreclosures, and all that jazz. Banks are going to start repossessing homes left and right, listing them on the market, which is a trend that's already started to appear over the past few months. So this is a trend we've been seeing more and more of lately, so it's not something we should just brush off. We need to start being proactive and saving our money, or else we could end up losing our homes, not to mention a lot of stress. So let's make a conscious effort to save our dollars. Thanks for watching, and please make sure you subscribe if you enjoyed the video, and be sure to leave a comment below letting me know what areas you are seeing the major price cuts so far.